Hello, ladies and gentlemen. Good morning, good afternoon, and good evening to you, depending on whichever part of the world you're tuning in from. I'm so excited and glad to be with you here this morning as we are going to be taking another fresh new look at the financial market. Before we run through, let's go through our daily routine by confirming that we are all on the same page. So if you can see my screen and you can hear my voice loud and clear without distortion, please kindly give me a positive feedback by typing in hi in the comment section. So this will give me a positive feedback and then we can kickstart the session right away. Thank you very much, guys, as you do so. Okay, so let's see what we have here in the comment section. I see, okay, 064584 Elima Harry 87. Thank you very much. Carrie, good morning to you. Thank you very much. Kolesarim 1979. Thank you very much. So I think we should just kickstart the session right away. And so on this note, I welcome you all to another edition of the Extreme Speed Live. My own name is Sheriff Daramola, and for the next 1 hour thereabouts, I will be your host as I will be taking you on a trading journey where we shall be evaluating the financial markets from a technical standpoint using our basic tools such as trend lines, key levels, and of course chart patterns to unravel the potential trajectory of price action today. Since the week began, we've had quite a very profitable start to the week. We've been monitoring the US All Sport, the USTech100, USDJPY, and of course the XAUUSD. And on all of these assets, we've done pretty well since the beginning of the week as we're currently running with some significant amount of profit across board, giving us a good start to the week. And for those of you who are part of this journey, well done to you. And we shall be looking into the details today and see how we will be managing our position. And in fact, I have quite some interesting and of course simple trading setups that we will be using to guide our trading decisions for today. So I encourage you to stay tuned in, grab your favorite beverages, and don't miss out on any of the ideas we will be deliberating on today. And for those of you who are joining us for the first time, you're highly welcome on board. I'm very excited to have you around with us. You will be wondering what this is all about. Well, the Extreme Speed Live platform is an avenue where we gather every day to do follow-ups and reviews of our current positions in preparation of the New York session. Now, this session officially kickstarts about 10 a.m. UTC, 11 a.m. West African time, and I encourage you to stay tuned in so you don't miss out on the insights that we will be sharing today. And before I proceed, it's important for you to note that my aim here in this community is to equip you with the knowledge and skills necessary to make informed trading decisions independently. Now, the more time you spend with us here, the better you will become at comprehending our analytical approach and utilizing the information gathered here to enhance your own trading decisions and strategies. So once again, I extend a warm welcome to you and encourage you to actively engage in the comment section. So with that being said, here we will be diving right into the business, and as usual, the first thing we normally do is to keep tabs with the fundamental factors that will be affecting the market sentiment today. These fundamental factors often manifest on the charts in technical patterns and price movement. Now, by monitoring the economic calendar, we can easily identify potential correlations between key economic releases and specific technical patterns on the chart, hereby giving us valuable information and timing to position ourselves in such a way that we can capitalize on any trading opportunity prior, during, and even after this economic event. Now, based on the assets we're monitoring so far this week, which I did mention earlier, we have been focusing on economic features from both the United States and the Japanese economic docket. The Japanese economic, there is no high impact event for the Japanese economic feature for this week, but we were able to include some mid-tier economic features which could also influence the market sentiment as well. Yesterday, we were looking forward to the unemployment rate from the Japanese economy, and of course, data came in beyond expectations, giving us a 2.4% as against the 2.5% expected, which is a positive signal that shows that the labor sector in the Japanese economy is doing pretty well. And of course, we've seen some positive traction in that regard. So we will be looking at how the market had reacted to this event and how we will be positioning ourselves for the next move. Now, for today, Tuesday, January 30th, there are no high impactful events from both economies, but what I did here was to include the mid-tier economic features, and we have a handful of them, but we will be touching those ones that are important that we will look forward to. Now, one of the important ones today is the Housing Price Index, a data released by the Federal Housing Finance Agency. And of course, it gives us an estimated value of housing market conditions. And it is an important indicator as the housing market is considered as a sensitive factor to the US economy. Generally speaking, a high reading is considered as positive for the US economy, which will dovetail to positive traction in favor of the US dollar, while anything lower than expected is going to be showing signs of contraction in that sector. And from the previous data here, we have 0.3%, though we do not have a consensus. So we shall, in this kind of situation, we usually see consensus come up maybe 2 or 3 hours into the event. So I will look forward to see what the actual data will be on that one. Then we also have the US JOLTS data, which will also be closely watched by market participants today. And of course, this is a survey done by the US Bureau of Labor Statistics, another economic feature from the labor sector in the United States, which helps measure job vacancies. Now, if the data comes in higher, then it gives us a positive signal for the US economy, while a low one is considered as negative. So we have 8.79 million for the previous data, and we have economists projecting 8.75, which is a little bit lower. So let's see what the actual data will be on that one. Then finally, from the United States, and of course simultaneously with the JOLTS job opening, is the Consumer Confidence Index, a monthly data released by the Conference Board, and it gauges sentiments among consumers in the United States, reflecting prevailing business conditions and likely development for the month ahead. Now, one important thing about this index is that the data shows us a picture of whether or not consumers are willing to spend money. A key factor, as consumer spending is a major driver of the United States economy. So we look forward to see what the data will be on that one. We actually don't have anything to compare with, so maybe an hour or two we will see something to work with. So these are the events we look forward to from the United States. Then much more later in the day, in about 12 to 13 hours, we are looking at the retail trade from the Japanese economy, which is usually released by the Ministry of Economy, Trade and Industry. And of course, it captures the aggregate sales made through business locations in which the principal activity is the sale of merchandise and related services to the general public for household or personal consumption. A high reading is considered as positive for the yen, while a low reading is considered as negative. Now, from the data we have here, the month of November came in at 5.3%, and we have economists projecting 4.7% expansion. Though there are economies are expecting an expansion there, but what the expectance is not as high as the previous month. So we look forward to see what the actual data will be. Will it be just as expected, below expectation, or beyond expectations? But one important thing here is that as technical traders, we understand that the anticipation of this event usually affects one way or the other the sentiment in the market, which would reflect on the chart as price action. Now, with that in mind, what we will be doing today is to see how we can strategically position ourselves for the next move by looking out for patterns and structures that will guide our trading decisions. So with that being said, here we will be diving right into the business. And of course, the first asset we will be looking at this morning is going to be the US All Spot. And so far this week, we've done pretty well on this particular asset. We have been selling this asset since the beginning of the week. And in fact, we have a minimum of 2 sell positions running in profit at this point in time. We had the first sell position triggered at the breakdown of the $78 area, which is currently running with about 110 pips, while the second position is currently running with about 60 pips. So we have roughly about 170 to 180 pips at this point in time, which makes it quite a very good start for the week. And at this juncture, since price had moved significantly well, the next thing we want to be doing right now is to ensure that we move all our stop losses and protect the current sell position as we begin to notice some buy pressure resume around the $76.50 zone. And as it is right now, I will be suggesting that moving our stop losses to the second entry point, and please ensure you have enough breathing space for price action to move around. Let's secure all positions around the zone, and let's see how the market is going to play out from here. Now, with a well secured position at this juncture, what is going to be our next line of action for today? Are we going to continue selling, or will the buy pressure we have been witnessing here in the last 12 hours make a statement for buyers to push price to the upside? Well, it's important for us to also take into consideration the factors behind the scenes that has been driving and affecting the market sentiment in this environment. Well, we saw how the oil prices showed a slight uptick during the Asian session, as you will see continued buy pressure around this area, giving us signs that this commodity attracted some new buyers in this market, hereby putting some pressure on the downtrend scenario we have been witnessing since the beginning of the week. And I'm of the opinion that the reason why this could be, well, we have been talking about this in the last 3 weeks or so, that the geopolitical tensions in the Middle East, which are intensifying, continue to raise concerns about oil supply, providing crucial support for these assets. Now, reports indicate that President of the United States, Joe Biden, is likely going to authorize phased U.S. military actions in the coming days, which further adding to market uncertainty. Remember, we talked about the attack on the U.S. personnel in Syria, where we had 3 U.S. personnel killed and 17 others injured. And of course, the United States president had vowed to retaliate this attack. Now, this of course adds further adding to the market uncertainty, and other factors include the FOMC monetary policy meeting, which is beginning today, and market participants may opt to remain on the sideline as they are eagerly awaiting cues regarding the potential timing of interest rate cuts by the Federal Reserve. Now, this factor here will significantly impact the US dollar dynamics and influence demand for US denominated assets such as the US oil. Additionally, the American Petroleum Institute is set to release US stockpile data today, potentially affecting crude oil prices. So we have quite various factors here that will be affecting the market sentiment. And one of the things I want to hold on to here is the intensifying, or let me say continued concerns surrounding oil supply as regards to the geopolitical tensions in the Middle East, which could probably incite some more demand for oil prices. And when there is high demand, we expect that price will definitely rise. Now, with the information we have here, let's look at things from a technical standpoint and see how we intend to manage our positions and see how we can strategically position ourselves for the next move. Now, scaling up into the daily time frame, let's quickly run through, especially for the sake of those who missed out on our earlier editions. Let's see what the market has been doing since we took into consideration the nature of price action in the last 4 to 5 months. Pardon me, please, and sorry for the break. I had to attend to some personal issues here. So, where are we? We were talking about the daily time frame, where we are to take into consideration the nature of price action in the last 4 to 5 months. And one of the things we observed on the daily time frame is the fact that price action has been bearish since the month of September. And to emphasize the strength of the sellers, we have this descending trend line to work with. And we've actually been using this structure here for the last couple of weeks right now. And one interesting thing we noticed that happened during the first week of the month of December was the fact that despite the strong bearish momentum, we begin to notice how sellers were finding it difficult to break through that area around the $68 and $70 zone to emphasize the potential buying opportunities around that area. Now, this continued into the early days of this year. As we saw price started again, we saw a retest of structure as sellers were unable to break down the previous low, giving us a higher low. And in fact, we were able to notice the transition of price action into a potential reversal pattern in the form of a double bottom structure. Technically, this is a significant reversal pattern, and whenever we identify such patterns, the next thing we want to be doing is to mark out the neckline, which we will need it to be broken to validate the potency of that reversal pattern. So we had a neckline at our previous key level, which was the $75 area, and one interesting thing about that neckline is the fact that it also shares a beautiful confluence with that descending trend line. So if price breaks out of the neckline, price will also have broken out of the descending trend line, which will emphasize that buyers are getting stronger, and hereby informing us that this trend line may no longer have the capacity to continue to negate the bullish attempt. Now, we saw how price climbed significantly well throughout last week's trading session, which we of course took advantage of, and we saw how the market closed exactly around the $78 area as at the end of last week's trading session, making that level our new key level for this week. And with the way things are going, you will see how that $78 area had played a major role in negating all attempt by the buyers to push out of the structure since the month of November. Look at what happened here. Buyers were unable to break through. The same thing happened here, and then during the last day of November, we saw the same thing happen. And right now, price action was back into the structure last week, and the new week saw selling pressure resume around that area to incite some potential selling opportunities, which we of course capitalized on. Now, the question at this juncture is, will price action continue to the upside by breaking out of that key level at the $78 area to incite new waves of bullish momentum, or are we going to see a situation where price will go through a retracement that may probably retest the neckline that was broken of that reversal pattern to incite an uptrend move, or may go as far as this descending trend line to retest it to incite the next uptrend move? Now, the question we want to be answering this morning is to see how far will this retracement phase go before another wave of bullish momentum will happen. Now, with this information we've gathered here on the daily time frame, we will scale down into the 1 hour time frame so we can have an a perspective into how market participants had reacted to our key level at the $78 area. Now, going into I think I had something to show you on the 4 hours time frame, and on the 4 hours time frame we had a couple of ascending trend lines which emphasized the strength of the buyers since the beginning of this year. And you will see here we have one of the trend lines right here, which is the one we are going to be using right now. And last week we saw how price broke above the trend line, and as at the moment price is already below that trend line. Now, if we take a closer look at what has been going on here in the last 1 week, you begin to notice what may look like a reversal pattern in the form of a head and shoulder, where we have the head right here, and we have transition of the right shoulder into something like this, where the $76 area will be serving as the neckline. And interestingly, the $76 area shares a confluence with the second ascending trend line we have here. Now, if price goes ahead to break down both the 76 and the ascending trend line, this could be a very good opportunity to join a decline to the downside. However, if buy pressure persists around this area and price climbs back above the ascending trend line, then we are back within the buyer's territory. Looking out for more opportunity above to buy would make quite a lot of sense. So with the information we have here, let's scale down into the 1 hour time frame to see what has been going on since the week has begun. Now, looking at the structure, let me zoom in so you can see things clearly. Remember that at the beginning of the week we had this range identified. After price action was confined within the $78.50 level and the $78 area for the first 8 to 10 hours of the new week, giving us an indecisive phase. And of course, when we have a range like this, we all want to exercise patience and wait for either price breaking out of the resistance line to give us an opportunity to buy, or break down the support line of that range to give us an opportunity to sell. And in fact, the latter was what happened yesterday. We saw the breakdown, and if you had missed out on the breakdown, I talked about this yesterday, that a retest of the structure will be all we need to join the decline to the downside. And as it is right now, we have two sell positions running, and as at this morning, I did identify another level around the $76.73 area, which I said I will be adding more sell position if price action ever breaks down the structure, though I have a sell position triggered already. And for those of you who are yet to join this, you can have a sell stop below the structure to maximize the potential of this bearish move. However, in as much as we are looking out for more selling opportunities in this market, we need to be very, very, very careful around this area. We talked about some factors earlier on, as we said, how the market participant may opt to remain on the sidelines as they eagerly await cues regarding the potential timing of interest rate cuts by the Federal Reserve, a factor that may significantly affect this asset. And of course, I talked about the report we are waiting from the American Petroleum Institute, which could also affect this market dynamics. And if we take a closer look at this $76.73 area, you will see that since the later part of the New York session yesterday, we have seen how sellers have found it difficult to break through or even settle below this area. Every attempt by the sellers to break through has always been met with strong resistance from the buyers, as you will see here. And in fact, we have an hammer candle a couple of hours ago. As you will see, we have an hammer candle here, which technically informs us that buyers are still very present in this market, followed by an engulfing bullish candle, as you will see here. So with all the technical parameters here, it shows that this asset is attracting some buying pressure in the last 12 to 16 hours or so. And with this information, with this understanding, it's important that we secure all the current sell position, like I stated earlier, and also keep our buy options open to as well. Now, with the current situation and with the illustration I just explained earlier, what are the conditions here that will make us feel comfortable changing our bias from bearish to bullish? Well, I have a level around the $77.40 area, which of course triggered our second sell position here. I would like to see price action climb back above this area, after which we will have something like a reversal pattern, something like this. As you will see, price is here to break the previous low, and this could probably incite an uptrend move. So I want to see price above the $77.40, and then in fact, if price is above the $77.40, price will also be back above that ascending trend line to welcome more buying opportunities. And if price continues to climb, we have the $78 area. Remember, this level is our key level on the daily time frame, our key level, and of course the neckline of that reversal pattern we identified on the higher time frame. So if price breaks out of that structure, we'll continue to add more buy position, and if price goes ahead to break out of the highest point for this week, that is the $78.50 level, we shall continue to add more buy positions to our existing trade. So I will encourage us all to mark out these levels on our chart, as we will be needing them to guide our independent trading decisions. So we are selling only below the $76.73 level and looking out for buying opportunity above the $77.40 area. So I encourage us all to, and in fact, I'm beginning to see something here. I want to readjust this ascending trend line to capture all these pivot lows right here, which makes it right on spot with where price action is right now, as you will see here. In fact, I have a new idea going on right now. So if we look at the structure and considering the continued buy pressure around this area, we could be having a neckline of this pattern around this point. So we have the $77.15 area. So right above this area, we shall be placing another buy stop order. That is a breakout of this area will validate the reversal pattern to incite another wave of bullish momentum. So I just marked out a new level here. So let's take this also into consideration while we continue to monitor price action. So this is how we are going to be buying. And please, while we buy, please let's make sure we have enough breathing space for price action to move around. So stop losses may be as much as 80 pips on this one. So let's keep that in mind too as well. If you have any questions, feel free to let me know in the comment section. This is my simple view on the US All Spot. I will take the next 10 to 15 seconds to see if there are any questions before we move on to the next asset on our watch list. So in the absence of no questions, I want to take this as a confirmation that we are all on the same page. And in that regard, we shall be moving on to the next asset on our watch list. So the next asset on our watch list for today is the USTech100, popularly known as the Nasdaq, and in fact we've done very well since the new week began as we bought this asset at the breakout of that resistance line at the 17,445 level, and at this moment we have a minimum of 3 buy positions running in profits. We have the first position running with about 150, while the second buy position is running with about 80 pips, and the third one is still in a loss of about, let's say, 5 or 6 pips thereabout, which still has a tendency of continuing to the upside. Now, for the sake of those who are joining us for the first time, let's quickly run through how the week began and what we saw that made us consider buying this asset. Now, the week began with a bullish note. We saw a sharp rejection of our key level situated at the 17,350. We will talk about that in a moment when I scale up into the higher time frame. We saw an hammer candle, a sign that buyers are present, and you know how we use our key levels in this community when price remains above the key level, and we look out for patterns and structures that supports the idea of buying that asset. So we had a range identified at the beginning of the week where price was confined within the 17,445 and our key level at the 17,350. So we were looking out for either the breakdown of the support line for selling opportunities or the breakout of the resistance line for buying opportunities. And prior to yesterday's live session, I already told you that I had the buy position triggered, and I did mention that we will maintain this bullish idea as long as price remains above this resistance line at the 17,445. And we also talked about adding more positions if price action ever breaks out of the 17,515. As you see, buy stop order triggered at that point, and then finally we had another trigger at the 17,600, which is still running at this point, doing a loss. So it's been a very profitable start to the week on the USTech100 too as well, and it's high time we moved our stop losses accordingly and secure the current buy position. And if you would ask me, anywhere around within the 17,550, while we also remember to give enough breathing space for price action to move around, makes quite a lot of sense to move our stop losses too. Now, with a well secured position, how do we intend to maximize the potential of this opportunity? Are we continue buying, or we could see price retrace a little bit to the downside in attempt of profit-taking activities to incite another wave of bullish momentum? And one thing I would also like us to note here is that we are at a all-time high on this asset, remember, and I did mention the psychological peculiarities surrounding price action when it's within the zone of all-time highs, as it usually take a while before price action acclimatize to this price zone before continuing the uptrend. And this usually out of fear, we see market participants taking some profit off the chart out of the fear that price may crash, and this could reflect on the chart as retracement moves, choppy situations, and even consolidation phases. Now, if we zoom into the structure on the daily time frame, you will see that in the last 1 week, price action has been range bound within the 17,680, and our key level had a 17,350. Now, since price still remains above our key level, we shall continue to look out for more buying opportunity. A breakout of the 17,680 definitely will confirm an uptrend continuation pattern, and we look forward to adding more position above that particular structure. So it's quite a simple setup that supports a bullish idea. But if at any point in time, if the selling pressure persists here in such a way that it leads to the breakdown of the key level at the 17,350, this could welcome selling opportunities back into that ascending trend line, dovetailing to a minimum of about 300 pips to a maximum of about 500 pips to catch here, if that is going to be the case. But I doubt if that will happen. But if it does happen, we want to be on standby to capitalize on that move. So scaling back down into the 1 hour time frame, how do we intend to continue this uptrend scenario? So like I said, we have another buy stop order above the 17,665. So let's see how far this momentum is going to go. And to make things easy for us, I think we should mark out a trend line, which we will be using to guide our decisions around this structure. So look at how this trend line had played a major role in pushing price to the upside since last week, Friday. So we have a temporary one right here, which I will lessen the pixel of this one, while the major one will be right here. So as long as price still remains above this ascending trend line, most importantly, the major one will still hold on to a bullish bias. So we could see price retrace back into the trend line here, and the appearance of buy pressure will definitely welcome more opportunities to join the uptrend. We would not consider selling unless we have some significant structure like the breakdown of this ascending trend line and the confirmation in form of a retest of the structure before joining, and then probably adding more position at the breakdown of the key level at the 17,350, which I shared with you on the higher time frame. So this is my simple view on this structure. So we have a simple setup. So I encourage us all to mark out these trend lines and of course key levels, as we will be needing them to guide our trading decisions for today. If you have any questions whatsoever, feel free to let me know in the comment section. I'm here and willing to be of help in that regard. Okay, so in the absence of no questions, I take this as a confirmation that we are all on the same page, and in that regard, I will be moving on to the next asset on our watch list. So the next asset on our watch list for today is the USDJPY, and the USDJPY too has done phenomenally well since the beginning of this week, as we have been selling. Remember, the upper week when we traded this asset, we were buying this asset where we scooped in over 800 pips in profit from multiple buy entries, and right now we begin to see some series of lower lows and lower highs, which may be as a result of profit-taking activities, and also we have some factors too as well, which is affecting this asset too behind the scenes. One of the major reasons is the US dollar, which remains weakened due to the positioning ahead of the upcoming Federal Reserve decision coming up tomorrow, starting today, and the announcement coming up tomorrow. And we also have the intensifying geopolitical concerns point to potential military actions against the Iranian military by the US president, heightening the risk of further conflict in the Middle East. And coupled with the Bank of Japan's recent hawkish stance, last week we talked about how Ueda mentioned that a potential shift away from extensive stimulus is on the way as the inflationary pressure in the Japanese economy is gradually subsiding, and that as early as the month of March/April, they may likely pivot from their current ultra loose monetary policy, which is a very interesting signal for buyers of the safe haven Japanese yen. Now, the continued decline in US Treasury bond yield has narrowed the US Japan rate differential, further bolstering the appeal for the yen at the moment. And we know how the US Treasury bond yield is directly proportional to the US dollar. If the US Treasury bond yield rises, the dollar also follows suit, and if it drops, the dollar too will drop. And at the moment, the US Treasury bond yield has been showing signs of decline due to the uncertainty surrounding the escalating tensions in the Middle East. Now, as the market awaits the outcome of the FOMC monetary policy meeting, which will be announced tomorrow, our current sell position needs to be safeguarded at this point in time, as anything could happen from this area. So talking about the current position here from a technical standpoint, we sold the breakdown of the 148.00 level yesterday. Remember, we talked about this range at the beginning of the week where we were looking for either price breaking out of the resistance line to give us an opportunity to buy, or the breakdown of the support line to give us an opportunity to sell. And in fact, prior to yesterday's live session, I told you I had a sell position triggered, and that for those of us who missed out on that opportunity, you want to see price come back and retest the structure. And if we see continued selling pressure around that area, it will be a good opportunity for us to join the downtrend continuation. And in fact, for about 3 to 4 hours, we saw selling pressure there, insights and selling opportunities. And we also marked out the 147.700, where we said we shall be adding more sell position to our existing trade. So at the moment, we should be having a minimum of 2 sell positions running in profit right now. Let's see how many pips that is. We have one right here about 77 pips, while the second one is currently running with about 50 pips. So we have roughly over 120 pips running in profit at this point in time. So well done, and kudos to everyone who did capitalize on this trading opportunity. As it is right now, it's important we safeguard all our positions. Remember what I said earlier as regards to the fundamental factors behind the scenes. And for me, I'm suggesting that anywhere around the trend line here seems most appropriate. Move your stop loss into the structure, giving enough breathing space for price action to move around. Now, with the way things are going right now, it appears that the yen is gradually gathering more momentum, continuing to the downside. And in fact, I would like to show you something on the higher time frame so you can get to have an idea into what we are seeing here. Now, on the daily time frame where we started our analysis for the week, after taking into consideration the nature of price action since the beginning of last year, that's an historical data of about 12 to 13 months. We get to understand that the market has been very bullish, and we have an ascending trend line after capturing all the pivot lows here, further emphasizing the strength of the buyers in this market. Now, in addition to this trend line, we had our key level situated at the 148.800 area. This key level has been holding sway since last week for me personally, and you will see how this level has played a major role in determining the direction of price action since the month of September. It was initially a buying niche at some point before price action finally broke down this level in the month of November. And from a technical standpoint, whenever we have a breakdown of a key structure like this, we expect at some point price may come back to retest the structure in anticipation of pushing price to the downside. Now, If we look at what has been going on here in the last couple of weeks now, we can see that as soon as price got into that 148.800 area, we have been witnessing selling pressure around that area, emphasizing how buyers are finding a strong barrier around that level. Now, coupled with the hawkish remark from the Bank of Japan governor, this looks like a sweet spot for more selling opportunities in this market. Now, how far will this bearish momentum go is what we don't know, but we have some structures here. We have this ascending trend line as a TP target, and in fact, if price goes ahead to break down retest, we could be looking at more selling opportunities in this market. So we're looking at a minimum of about 500 to 600 pips to catch here if price really move well to the downside. However, if the contrary happens in such a way that this consolidation phase here transitions into an uptrend continuation pattern, well, a breakout of the resistance line of this pattern will definitely incite buying opportunities at the breakout of our key level. So with the information we have here, you would agree with me that we are at a crucial juncture in this market where, depending on what happens here, will determine what our next line of action will be. So scaling back down into the 1 hour time frame, let's look at things more clearly here. So this morning, while I was dissecting the structure, okay, I think I have something to show you on the 4 hours time frame. Let me see. Okay, so on the 4 hours time frame, what I did on the 4 hours time frame was quite simple, very simple. I took into consideration the nature of price action since the beginning of this year, and we have an ascending trend line that buttresses the strength of the buyer. So it has been a very bullish momentum since the beginning of the year, and in fact, we had the first time price action breaking down that ascending trend line at the beginning of this week. So if we zoom into the current structure, the ascending trend line appears to have been broken to the downside, inciting some bearish signal at this point. Now, how far will this momentum go is what we don't know. Are we going to see a situation where price could come back and retest the trend line in an attempt to continue the downtrend, or will we see a situation where price will just go all the way to the downside, or in fact break back above this ascending trend line to incite another wave of bullish momentum? So to answer this question, we will scale down into the 1 hour time frame. So this morning, while I was trying to dissect this current market structure in an attempt to decipher what may likely happen today, I have two structures here we will be using to guide our trading decisions. The first one here is this descending trend line. As you will see, since the beginning of the week, price action has been bearish. And after connecting the series of lower highs, we have this beautiful descending trend line. In fact, we have two of them right here, the major one and the temporary one. And you know how we use our descending trend lines in this community. As long as price remains below the descending trend line, we shall continue to look out for patterns and structures that support the idea of selling that asset. Now, with the way things are going right now, you will see price still remains below the trend line. And in fact, since the later part of the New York session yesterday, we have noticed how this area has been negating all attempt by the sellers to break through that area, giving us signs that buyers are present around this point. Now, with the situation we have here, the question is, are we going to see price retrace back into the trend line to incite another downtrend continuation, or even break out of the trend line to incite buying opportunities? Or will price action go all the way, breaking down the structure to the downside? So I identified the 147.300. So I already have a sell position triggered at this point. So we continue to sell as long as price remains below the structure. But if it so happens that we get taken out of the sell position where price climbs up into this area, maybe the trend line or the 147.700, the emergence of selling pressure around this area could give us signs that buyers are finding it difficult to break out of the descending trend line. Then this would incite selling opportunities. So if we see continued selling pressure around that area, that is, buyers are finding it difficult to break out of both the descending trend line and the 147.7, the emergence of a reversal pattern will give us a clue to join a bearish move. So when we have a reversal pattern there, mark out the neckline and then sell the breakdown retest of the neckline to the downside, and of course had more sell positions below the 147.300. However, if price breaks out of this descending trend line, this could be a signal that could incite buying opportunities. But I would advise us not to get too excited, so we are not having a buy stop order there. Instead, we'll wait patiently for a retest of structure to give us confirmations to join that uptrend move. So we can either see price retest the 147.700 or the descending trend lines here to incite an uptrend continuation. So you can see how this trend line here is going to be playing a major role in guiding our trading decisions for today's trading session. So I encourage you to mark out these levels on your chart, as you will definitely be needing them to guide your independent trading decisions on the USDJPY today. If you have any questions whatsoever, feel free to let me know in the comment section. As always, I'll take the next 5 to 10 seconds off to see if there are any questions, while you can also use that time to mark out those levels on your charts. All right. So in the absence of no questions, I want to assume that we are all on the same page. And in that regard, we shall be moving right into the last assets on our watch list for today. So the final asset on our watch list for today is my favorite asset, and that is the XAUUSD, popularly known as the gold spot. And on the gold spot this week has been tremendously profitable for us, as we have been able to capitalize on buying opportunities around this area. And since price broke out of the $2024 area, we have been buying this asset. Now, for the sake of clarity, for those of you who are joining us for the first time, let me quickly share with you what we saw at the beginning of the week right here on the 1 hour time frame that made us consider buying this asset. Now, the first thing we saw on the 1 hour time frame was the breakout of this descending trend line, which we identified on the higher time frame. So we had this descending trend line marked out. In fact, this descending trend line has been supporting the bearish momentum since the beginning of the year. Remember, we talked about how the new year started with a series of profit-taking activities leading into price action, finding lower lows and lower highs. And you know how we do it in this community. When price breaks out of our trend lines, it's a sign that the trend line may no longer have the capacity to continue to negate the bullish attempt. And of course, we saw retest of structure, giving us beautiful opportunities to continue the uptrend scenario. Now let's go back into the 1 hour time frame. Now, in addition to the 1 hour time frame, let me zoom in so we can see things clearly. In addition to the 1 hour time frame, we saw how price action was confined within a range during the first 8 to 10 hours of the week. Price confined within the $2028.50 level and the $2019.20 area. And of course, you know how we do it whenever we have a range like this. We exercise patience and wait for either the breakdown of the range to happen, giving us selling opportunities, or the breakout of the resistance line to happen and give us buying opportunities. And prior to our live session yesterday, I did mention that I had the buy position triggered. And of course, I also opened our mind to the idea that price action may come back and retest this descending trend line that was broken in an attempt to continue the uptrend move. To help us manage a retest of that structure, remember that we identified this $2024 level, which we duly marked out, and we said buy pressure around this area will be all we need to join that uptrend continuation. And look at what happened here. About 3 to 4 hours into the New York session, we saw price drop significantly into the structure, and for about 3 hours, we saw buy pressure resume around that area, giving us the opportunity to join our first buy position for the week. And we kept on adding more position. Remember, we marked out this level here yesterday, the $2028.50 level. And of course, we added this $2035 area, all of which we said if price action ever breaks out of the structure, we will be adding more buy positions to our existing trade. So this was how we manage our buy position from yesterday. So currently we have a minimum of 1, 2, 3 buy positions running in profit at this point. And for those of you who capitalized on this opportunity, well done and kudos to you for being on standby to capitalize on that move. And as it is right now, you want to be moving your stop losses accordingly. Securing your position makes quite a lot of sense at this point. And I will be suggesting that anywhere below the 2035 area seems most appropriate to move all stop losses to, while we also give enough breathing space for price action to move around. Now, with a well secured position at this juncture, what is going to be our next line of action for today? Well, my answer still falls within the 1 hour time frame right here. The first thing we can see here is this beautiful ascending trend line. You see, this trend line here has been supporting the bullish momentum since last week Friday, and at no point in time did we see a breakdown retest of the structure to further emphasize the strength of the buyers in this market. And you will be asking, why is price of the gold soaring at this point in time? Well, the escalating conflict in the Middle East, which have heightened the risk of a broader regional crisis, is dampening recent market optimism, and this, coupled with the ongoing decline in the US Treasury bond yield, has significantly boosted the price of gold in the last 24 hours. On the other side, the US dollar is struggling to make significant gains as market participants seek clarity on the Federal Reserve's potential rate cuts. This dynamics further supports the price of gold at this moment, though a substantial upward movement appears unlikely ahead of the pivotal FOMC policy meeting, which started today, and may lead to a subdued range-bound price action activities today. So let's put this in mind that we might likely see some choppy situation today, and in light of this condition, it is prudent to safeguard existing buy positions. However, considering the fact that price still remains above this ascending trend line, we're still going to maintain our bullish bias. We may see a situation where price could go range bound ahead of tomorrow's FOMC decision, maybe within the 2040 and this ascending trend line, before a final breakout or breakdown of that range, giving us an opportunity to trade. However, we see here that since price tested the 2040, that is the highest point price action has been for this week, we have noticed selling pressure in the last 4 to 5 hours now. Now, if the selling pressure persists here, it doesn't necessarily mean that the bullish outlook is finally negated, because we still have trend lines here. We have the ascending trend line, which could still serve as a bus stop to incite more bullish opportunity. In fact, even if price breaks down this ascending trend line, we still have a bus stop at the retest of the descending trend line that was broken yesterday to incite another wave of bullish momentum. However, if you are a counter trend trader and wish to capitalize on this counter trend opportunity, that is, if price breaks down this ascending trend line, you can be looking at a minimum of 100 pips to catch here. So counter trend traders, breakdown retest of this ascending trend line may be a good opportunity to join. But for me, I will wait and see how the market will react to this trend line, where I will be looking out for potential reversal patterns like double bottom structures to join an uptrend continuation. But if price breaks down that trend line, then this could incite a strong bearish move to the downside. So on the XAUUSD, I still hold on to a bullish bias. So I have a buy stop order above the 2040 to capitalize on the uptrend continuation. So let's see how the market will play out in the next couple of hours as we look forward to the mid-tier economic features from the United States, which will reflect the housing price index, the JOLTS job opening, and of course the consumer confidence. So this is my simple view on the XAUUSD. I hope I made myself very clear. If you have any questions whatsoever, feel free to let me know in the comment section below. I will take the next 5 to 10 seconds off to see if there are any questions before we round off on today's session. All right. In the absence of no questions, I think we've come to the end of the Extra Speed Live technical analysis session. And in fact, it has been an insightful session so far, as we were able to attend to 4 of the financial assets on our watch list, including the USOILSPOT, the USTech100, the USDJPY, and finally the XAUUSD, all of which are doing very well so far this week. So we are really profitable on all our assets for this week, and that's a very good start to the week. And through the course of the session, we were able to identify simple trading setups using our basic tools such as trend lines, key levels, and chart patterns only to strategically position ourselves for the next move. And I do hope you marked out these levels as illustrated on the chart. If you did, well done to you. All we just need to do right now is to exercise patience and allow the structures to mature before jumping into any positions. And always remember that every decision we make in the financial market is more or less an educated guess until price action hits your TP target. And with this understanding, you want to ensure you have a well-defined risk management strategy in place to mitigate against any sudden pullback that may take us out of our positions. For those of you joining us for the first time, I do hope you are able to gain 1 or 2 things from what we discussed here today. If you did, you want to be part of our subsequent editions, as the more time you spend with us in this community, the better you get to understand our analytical approach and eventually be able to use the information you gathered in this community to make your own independent trading decisions. So I look forward to seeing you all same time tomorrow, 10 a.m. UTC, 11 a.m. West African time, as we come here again to review how well these assets have been doing, and at the same time prepare ourselves for another insightful edition tomorrow, where everyone is looking forward to the FOMC decisions, and of course FOMC announcements and interest rate decisions as well. So I wish you all the best of luck today. Trade smart, trade consciously, and do have a wonderful evening, everyone. Bye bye.